Good morning, good afternoon, and good evening to those of you around the world. Welcome to Trading Rebellion with your favorite analyst from Trade the Chain. We are here to break down everything going on in macro, crypto, equities, and everything in between. My name is Nick Mancini, joined by CJ, both research analysts at Trade the Chain. And let's go ahead and kick off and what has definitely been an interesting week and could be a very interesting end to September. So I'm just going to pull up the Bitcoin chart actually to start because this finally came off of the highs that it was trading at and did not exactly sweep Monday's low, but we did discuss this as a possibility for any downside price action. So definitely a bit of a hit, and I would say, and CJ, correct me if I'm wrong here, but DXY was pushing up pretty much all night and this morning before selling off a little bit. And I would definitely say that this increase due to some of the FOMC rhetoric, which then pushed down most risk assets over the past 24 hours. Is there anything that really stood out to you on the charts? I mean, obviously equities took a big hit overnight as well. I think where did we close? We closed, all the way up here yesterday. So we closed at 4,400, and then we dropped down to 4,350 overnight. So pretty big sell-off, but I know you are kind of looking for a couple of long opportunities. Is there anything kind of standing out to you from a macro perspective between kind of all the majors that we've been looking at?
Not in equities specifically, but something notable from yesterday. I just thought the reaction of the market was very telling after the pause. There was no hikes that particular day. So the fact that the market really sold off after that without showing any type of strength, I thought just spoke to the weakness around the equity market. And then when you look at it in more global indices like the Nikkei, I think it's the worst performing day today that it's had in the past 3 months. And then everybody's talking about, TLT, and it's just another example of extreme sentiment. But I did not think that was very bullish in the short term, especially for equities. Yeah. So who knows? Maybe we need to go back to, the 4,200 level on ES, but that remains to be seen. There's not a lot of conviction to do a lot of different stuff. I will share some of my positions later in the show, but it's kind of bearish until proven otherwise following that event yesterday and market reaction to it.
Let's talk a little bit about FOMC because initially it did seem a little bit dovish, and the markets were reacting as such. There was really no downside price action other than a little bit of volatility. If I recall correctly, most assets kind of pushed back up from a very slight sell-off, and then after the conference was over is when things really started. The press conference, I should say, that's when things really started selling off. So a couple of the things that I saw that were shocking is one, he said that the majority of policyholders believe that it is more likely than not that we'll see at least one more rate hike in the future. And obviously, if you're thinking that we're going to be pulling back in the near future, that's the exact opposite of what you want to hear. And then the other one was that they think that the 3.8% unemployment rate is too low. And I think that's also fascinating because a highly functioning economy with an unemployment rate under 4 is the target. And so those things I think kind of shocked people more likely than not, in my opinion, because it's so blunt. It's very rarely do you hear the majority of us are all on this one side. The majority of us all think unemployment rate is too high. So that was a little bit specific. But what kind of caught your ear yesterday that that was either hawkish or dovish or gave you indication of any trades in the short term?
I don't think it was that much of a surprise. We know they're going to be higher for longer. What's most interesting to me is the market reaction to it and selling off. I know it wasn't at the peak of an uptrend or anything, but it kind of just shows continued strength of the downtrend to me.
And I would definitely agree with that. And I think and I think, at the most basic level, I could be wrong here, but just kind of looking at the way that rates reacted, looking at the dot plot, just looking at general expectations, there were a large amount of people who really did expect, a decrease in the federal funds rate either this year or very early next. And I think those people are very well misplaced. I mean, if you kind of look historically, Fed funds rate doesn't start pulling back till something breaks. And if something's breaking, everything is bearish anyway. So, I just, in my opinion, I think we can really start talking about that maybe next meeting, maybe November at the latest. But I think anybody who's, listening is like, I think we've got one more hike in front of us, and then we can kind of start talking about that. So let's go ahead and dig back into the charts kind of with that general idea in mind that we're probably going to see at least one more hike in the future, understanding that, we're going to have to price that in to some degree. And we've got this low right here on equities sitting at what, about 4,336, which is the August low. And then below that, I guess we kind of have this little area here, but I'm going to consider this to be just a massive kind of fair value gap in the grand scheme of things. And you mentioned that 4,200 number, which coincides with the high from back in, what is that, February? Yeah, back in February. And I guess we also, I guess I will note this. This is, we've got that number sitting right there as well, 43.27. So if this whole little demand zone right here falters, then it's pretty much a free fall down. Do you kind of agree? And does that kind of match up with what you're looking at, or do you think that there's still a little bit of hope left in the chamber?
Well, when you look at positioning and you see how many folks bought at the recent highs, especially just, look at COT futures positioning, like it is concerning. So I try, yeah, it is concerning. And that would be the technical level. Like if you were to look at positioning, I also just saw some of the most interesting fades are actually planning on DCAing into the S&P and Qs once we get to the 200-day moving average. So that none of these things really feel that inherently bullish. It feels like a lot of the soft landing narratives have been somewhat priced into the market at this point. And yesterday was a pretty good reminder, or maybe just the market telling us that. So who knows? Targets are targets, but we'll see how the trend kind of goes these next couple months.
Correct me if I'm wrong here, CJ, but this was the 14th, so this was 7 days ago, and I do remember on this uptrend, us talking about this possibility of a lower high, and if we reject off of that, 45.40 number, which we didn't even get to, that it would form a lower high, and we would be looking for bearish bets. So I think if someone wanted to go back and play that tape from last Thursday, I'm pretty sure this is exactly what we talked about, and look what's coming to fruition. Now, the one struggle here is that, I think we are going to be correct on lower, but where do you short? Where do you get into that trade if you are not in it? And I think that is the really tough part here, because you could just short and, but where would you set your stop? Where's your risk? So what I would look for is, if we run back up and we get rejected at the 43.80 number, that's a good short opportunity. I think you can define your risk here, because whatever that local top is will be pretty clear. And then you would obviously target this level, and then this level on the downturn. If you wanted to be more risk averse, you could just be patient and wait for a break of the August 18th low. And if that low breaks, then we are very likely to at least tag that estimated 200 moving average, which is currently right around 42.75. So that's how I'm looking at things. Are you even looking for shorts right now, CJ, or are you looking to get into maybe a long trade after some of this nonsense is washed away? Because I'm struggling myself on, I'm obviously more or less trading crypto, but if I see a really good equities trade, I'm going to probably load something up on Fidelity or Robinhood.
Yeah, I'm looking through a few different things. A lot of the trades, like the time to get short equities, in my opinion, if you were to do it at all, based on like the system that we talk about when you look at like news failure on top of positioning and the like technicals. And I'll bring up my chart here because I do want to talk about a couple different shorts. Please excuse my slowness. Okay.
While you're bringing that up, Joe Carbajal in the comments said JPAL has pretty much said things are going to get worse and need to get worse. Soft landing is no longer on the table. And Joe, I don't know if you guys listened to Nick Tamiraus, but his tweet, and I shared this with the TTC community before FOMC, his tweet was very ominous. I mean, he ended the tweet with quote unquote planes crash or planes land, economies don't. And he's
All right.
Very long.
Enough of the sensationalism. Like, let's just
I'm
focus
sorry,
on the candles that are.
Go ahead, CJ.
I mean, for what is like, it really doesn't matter what Powell will say. Like, whatever the market does, people will just look back at it and justify, oh, well, this specific sentence he said was hawkish, or this specific sentence he says was bearish. Anyways, let's get to the assets at hand. So yeah, obviously at support right now, it's a little bit difficult to short, based on like how I would approach this, or kind of what we talked about, is you look for the assets that have a max crowded positioning. In this case, we're looking at, look at all the people that were getting long into the highs. And that would have been fine if we kept going up. But if you don't go up when people are buying into the highs like that, there's going to be a lot of longs trapped up here, which there still are. And, to get back to neutral territory here, yeah, we might need to fall to 4,200. And that's still kind of a decent short setup in my mind. However, the day to do it was yesterday, after we had, a semi-bullish or a semi-hawkish, dovish FOMC. I'd put my stop at the top of that high, and it would be a short trade in ES specifically. Now, I'm not doing that now anymore, but the one that I do have still open that I'll talk about is ZL. So if we look here, so ZL's still like, basically with commercials, we'll go through these periods of accumulation and distribution, where you have long periods of accumulation, you have long periods of distribution, and vice versa. And so what we've finished over the past summer, really all that has been going on in soybeans is that commercials have been distributing. And you can see that indicated by the oscillator going to the 1 value and is now starting to come back up to the 10 value. So I won't get out of this trade until this value, potentially goes to 50, or I might even become a trend follower and try to catch a move like this, because I do think there's a secular downtrended boom bust cycle occurring in soybean oil. And like when you go back historically, it's a pretty interesting chart too. But it's like the whole idea of what we do in crypto is not very complicated and not very different than this. All we do in crypto is we trade around longer term boom and bust cycles, longing on the way up, shorting on the way down. The only thing that's different about the soybean oil market, or these commodity markets in general, when compared to crypto, in my opinion, obviously there's a lot, but from a charting perspective, is that it takes longer because these markets have more participants and are larger and are not as exciting. So typically the moves are much more longer and drawn out. But if there's a macro reversion here from roughly 60 or 70 back to like 40 or 45, I think that's a really nice potential trade to catch. And when we look at like the actual macro trend of this asset, we have hit another bearish point. So that's the one short that I'm in with a pretty good amount of conviction and a pretty, like, my largest short position right now. But
it's good looking.
We can talk about crypto too, because I know nobody really trades that.
I mean, it was a good looking lower high from a technical perspective. I'm 100% with you. So let's go ahead and move it over to the crypto side, because I think we covered equities pretty well. Certainly it doesn't look good in the short term, but it doesn't mean they can't, form some sort of recovery. Rarely do things ever head straight down. So we'll have to see how things head into tomorrow and the weekend, considering, crypto is the only 24/7 market. So we got Bitcoin up here, and obviously, as we mentioned, we did, sell off from the highs. And just to give an easy example of a typical intra-week trade is, remember, we have the Monday high, we have the Monday low. After it sold off on Monday, on Tuesday, swept the Monday high. After it sold off yesterday, it swept the Monday low. So very easy, simple, I don't want to call it easy, but simplistic trading strategies that anybody can employ with easy risk aversion. Short stop at the high. Now what you would look for, and I think CJ was looking for this earlier today, is along with the stop at the low. Now, I drew these lines for the TTC community after we got a little bit of buyback action in the 10, 11 o'clock hour. And the key level for me in the short term right now is 26.7, which is the 1 hour estimated 200 moving average. Break above that, I think we have a good chance of getting 26.9. Probably, I got this line here, but have a feeling we probably tag that VWAP if we end up making it back into the kind of value channel here. Then if we get rejected, which we kind of are right now, then I would assume we head right back to the Monday low. And what you would look for is a third sweep of that Monday low with a similar trade idea as before. Stop at the Monday low, try to trade it up. You would look for that on a sweep. And then if we break below the Monday low, then we would look for a play down to 26.1, possibly even lower, depending on how bad things would get. So that's how I'm looking at BTC right now. And I'll just go ahead and cover ETH because I want to get CJ's opinion in here. And ETH BTC also looks, a bit interesting for ETH possibly being a better trade, but ETH is a little bit tougher. I think, kind of this 1590 level is very critical. I think you had that lined out too, CJ. Get above 1590, head up to 1600, maybe 1605. And then if we get rejected at 1600, which is also the Monday low, remember, then we would be sent straight back to these lows right here. I don't know why the thing won't draw, but we'll get sent back here or possibly lower. So does that kind of line up with how you're looking at things, CJ? Because I know you had put in something to TTC where you were looking, I think, at that 1690 or 1590, not 1690. My apologies. But is that how you're looking at the trade opportunities right now?
Yeah, I'll bring up a chart of ETH BTC just to kind of speak.
Yeah, please do. I forgot
what I was talking about. Yeah, so let's take a look at ETH BTC very briefly. This has been a very depressing chart. A lot of people have been pointing to it on Twitter, and the sentiment is getting kind of extreme around ETH. And the reason why I like this trade here at this particular point is that it can potentially work in both risk off or risk on environments. So if Bitcoin goes up, potentially ETH BTC will go up. If Bitcoin goes down, we'll see if ETH actually is more resilient than BTC. But as of now, I think this is maybe not a buy zone, but I think this is a very strong point of interest for me in this particular trend to look for an inflection point, especially when you look at things like, the 1 hour. It's not as bullish as it was, a couple hours back. But when you look at the ETH chart, it does look like there's, starting to become a little bit of a deviation from that low. So perhaps Asia will bid it up this evening for us in the United States, Nick. But as of now, I'm not really, it's hard for me to predict direction. Like it looks like it's going to go up a little bit. I have no idea if it will. But the point is that the risk is kind of defined to the upside once again. And, funding rates, everybody's pretty bearish.
Yeah.
For a good reason, right?
Typically when I'm confused, what I try and do is just study patterns in the chart, because especially on LTF, we'll get a lot of repeats. And this right here really stands out to me. Why is it not drawing? You guys can't see any drawings on your end, right? This is stupid. Whatever. I'm just going to circle it here. Okay, so just bear with me for a second. 1 tap, 2 tap, 3 tap, failure, right? 1 tap, 2 tap, 3 tap, failure. Buyback, right? Get as close as you can to where you failed on the 3 tap, which, maybe ETH gets back up to 1600, maybe 1620, which is, around previous daily close. So, kind of same thing here. We're also very oversold. So you're going to have a lot of buying purely on RSI reflexes. And then we just freaking dump, much further. Does that happen again? I don't know. But when did the dump happen? The dump happened, after a very slow weekend. We had that break and then slow weekend, Monday open, and we dumped. So maybe we just grind a little bit higher Saturday, Friday, Saturday into Sunday, force a lot of these late shorts to cover, as I'm sure they did back here. And then maybe we drop lower. So, it's just an idea, but you have to build ideas for, these types of trades. I think if you're shorting here, you're out of your mind. If you're longing here, there's a lot more risk that you are stuck with than you would probably like to take. So, in my opinion, in these types of scenarios, I like to wait for buybacks and then rejections or acceptances on key levels. And that's why I think, 1600 very key level. And then, at 1620 is really the last level for bulls and bears to really spar. So I'll be kind of looking at 1600 to 1620 as a really key demand zone. And I think you have a great point about ETH BTC, but I'll go ahead and pull the chart up right now. It's not something I'm ready to trust yet because, and I'll tell you why, CJ. The news notification that we got about the SEC wanting to or putting more enforcement actions against CeFi and DeFi exchanges, I feel like ETH and the Ethereum ecosystem are more likely to take a hit from that kind of news story. And the scare is, why would I buy ETH if the SEC is going to start suing people again? So do you kind of subscribe to that same methodology, or are you just like, I don't care about that until the news comes?
Yeah, I don't know. It's just noise at this point. I can't really. It's nothing I can trade off of. I'm just looking for optimal risk reward. Everything else is kind of up to fate, and I think being a trader is a big part of it is like accepting that and just kind of letting go and saying, all right, this position's, I'm putting it on. The market's just going to do what it's going to do, and having that discipline to just, let it go.
And I guess just to bring it back to what we talked about Monday, we drew this line on Monday. ETH BTC is now hovering over it. So if ETH BTC breaks under 0592, in my opinion, it gets very, very ugly. So I'm going to be keeping a very close eye on ETH, and I'm also going to be keeping a close eye on ETH L2s as possible short opportunities. Here's one. I know CJ wants to talk about some of these funding coins as well. This isn't a funding coin, but OP just did a massive private sale of, I think, 120 million tokens. And if you've been listening to me talk about private placements, what's going to happen is the price is going to meet that private placement price. We don't know what the private placement price is, but if you're buying 120 mil OTC locked up for 2 years with a chart looking like this, my guess is between 50 cents and $1 at best, and it's still got 30 cents to go to $1, which is still right around those June lows. So I'm going to be looking for OP to be sliding down ever so slowly back to those June lows. And obviously, if we get some good news, I'll cut that idea. But 1.2 is on my list first. And then if we break below 1.2, I'll obviously be targeting $1 or possibly lower. So that OP is on my short list right now. CJ, what were you looking at for your funding coins and your other kind of alt opportunities?
Well, we were talking about IMX since that has had a lot of volume.
Yeah, I think it just recently became a little cartel favorite as of yesterday.
Yeah, I'll bring back the daily. I wonder how Spell ended up, because it had a similar pop like that the other day.
Actually, I think it was higher. You posted it. Or no? No. Oh no. Okay, I was looking at. There was a daily candle that I was missing.
Yeah, I didn't take the trade personally. I was just like right here. Although the funding was high, it looked like a very attractive short just because of that 1 day up thrust. And so perhaps we see a similar thing with IMX. Although there might be a little bit more in this thing. So yeah, I'm not going to short it yet, but it's.
Oh, go ahead.
I'm not going to short it yet. I just think it's got some interesting movement, but maybe maybe we let it come up a bit first. I'm also not really interested in longing it, despite the fact that funding is pretty negative.
No, that's the tricky part about it. Like I was staring at Rune when you called out Rune and Storage or Storage, however you pronounce it. But and I was like, I even commented, I'm like, I've been trying to short Rune forever. And I just keep closing trades at break even or for dust because it keeps just getting bought back up. And then of course, the night after I said that, Rune dumped like 10%. And of course I wasn't in the trade. So that's the trick of the trade. I mean, it doesn't look like a bad short on what are you on the daily? Like, I mean, stop at the recent highs. Like, I mean, on low risk, that's not the worst trade in the world, in my opinion. Like it broke the lows of that little range. Like that's definitely something that looks worrisome. And it's the classic cartel, make a massive wick, run up to near the top of the wick to get all the late shorters out from the first wick, and then dump it all to Hades. I mean, that's the classic cartel pattern. So
Is it Hades or is it Hades? It's Hades.
I've always said Hades, but that is a good question.
Yeah, I don't know. I'll have to brush up on the Greek history. Anyways, getting back on track. Yeah, we were looked at that with Rune in terms of shorting in the community, and then also like Storge. I was short though Rune coming into today, and I was very frustrated because everything else really sold off hard, whereas Rune had been one of the most resilient in the market for whatever reason. Now that doesn't mean it's going to happen or remain that way forever. Like what Nick said, I still think this is a pretty decent short setup, but I am probably going to shift attention back to Storge. We're going to call it Storge, regardless if that's right or incorrect. But maybe we come up a little bit more to 39 cents and short it once more. But the daily, over the last few months, this asset has just had really nice, like 100% oscillations back and forth that have been really nice to ride on the way up, and obviously optimal to short on the way down. But like start of the year, go up 100%, drop by 40%. Most recent rally did 103%. We average 40% drawdowns after that. So let's see what would bring us to a 40% drawdown. Yeah, roughly like 30, I would say. 30 to 28 is my price target ultimately for Storge. So as long as I can avoid any type of pumps in the interim, I think that's kind of an inevitable price target if you were to look at how this thing has performed historically with these kind of price oscillations. So we'll see. Obviously, things selling off a little bit more now, but that and ETH BTC are at very strong points of interest. I'll pass it back.
Yeah, and I think just as a general rule of thumb, if ETH is selling off, it's going to drag a lot with it. There's very few alts that are typically very strong against ETH. I will say Maker, MKR, has been very strong as of recent, but it's strong until it isn't. So that's just, I'm not going to suggest any longs with how things are looking now, but if ETH can get back above, I think what was my level, 1620? Yeah, if you can get back above 1620, I will remove bear bias until proven otherwise. So as long as we're beneath that level, bear bias still intact, and I think we will end up rejecting on that level and then moving lower. So that's gonna be my consideration. But the good news is that even though CJ and I are going to be leaving in just a couple of minutes, we are we run the Trade the Chain communities. So if you would like to stay up to date with our trades, our ideas, our analysis, all of the news and information updates that we stay on top of so that you don't have to stress and worry, there's a 14-day free trial at www.tradethechain. And final note is that we are, of course, working with Didex and BingX. So if you would like to use a decentralized or centralized trading venue that has earned plenty of rewards, gives value back to you, and gives you great prices on fees, please look at the links below in the YouTube summary section, and you will find your discounts and links there. So with that being said, good luck, happy trading, and we'll see everybody on Monday.